My name is Michael Guyette, publisher of the Lead Lag Report, and joining me is Caitlin Long, who I know a lot of people are big fans of. And Caitlin, I give you credit because you're one of the few people I see who still has the laser eyes on, which tells me you really believe in everything you're doing, which I want to get into. But if you wouldn't mind, Caitlin, just introduce yourself to the audience. Who are you? What's your background? How'd you get involved in the Bitcoin cryptocurrency space, and what are you doing currently?
Oh, I'm just a girl from Wyoming who spent almost 30 years in New York, 22 of which were for working on Wall Street. Got into Bitcoin in 2012 and came back home to my native Wyoming a few years ago and helped the state get some laws defining what digital assets are. In so many ways, what's happening is like, as one of my colleagues said to me yesterday, it's like derivatives all over again. They're not securities, they're not money, and they're not commodities. What are they? And we don't have clarity of the law. And what Wyoming was trying to do was clarify the law. And, boy, it's been an interesting journey. And I started Custodia Bank as one of the first few Wyoming special purpose depository institutions in 2020. We are not yet taking third-party money. We've spent a lot of time being the tortoise, not the hare, building carefully, and we'll be launching at a future date that I can't disclose right now.
What was the catalyst in 2012? I mean, you obviously got in it pretty early on.
Yeah, it was. I had a journey of discovery after the financial crisis, really during it, where I started to notice some of the things that I thought made sense and the things I learned in school were not how the world really worked. And you pretty quickly have to realize, oh my, it's not. You kind of have to unlearn what you thought you needed to learn or what you did learn in school. And so it was through an alternative school of economic thought. I did a very deep dive and very broad dive. Once I realized that what we learned in school wasn't how the world really works, I kind of had to unlearn it, but I wanted to learn how does the world really work. So I looked at everything in alternative schools of economic thought, from the Austrians on one hand to the modern monetary theorists, or the old chartalists on the other, and realized, I started to kind of get that so much of what we thought wasn't how the world really worked. But long story short, it was through one of those alternative school of economic thought mailing lists in 2012 that I saw people starting to talk about Bitcoin, and really dug into it in February 2013. And like so many, once you dig in, you never come back out.
So on the digging in point, because you've got the institutional background, as you got slowly more convinced of Bitcoin, how did you go about weighting it in your portfolio? And I say that because I think, there's this impression out there that if you were a, in quotes, Bitcoin maxi, that means every single dollar that you own, every single bit of fiat goes into the blockchain. I suspect that's probably not fully true for you.
Well, yeah, but I don't think of it as a portfolio. I really truly think of Bitcoin as freedom technology. And, it's an insurance policy against a system that I think we all know has skimming mechanisms. There are things about it that are just unfair fundamentally to regular folks, regular users. And I saw some of those skimming mechanisms, and that was part of what I understood that this technology was going to help us fix. What we're really after is really simple. It's an honest ledger. That's it. We want the fruits of our labor to be recorded in a ledger that is honest, where somebody isn't skimming any of the value of what we have previously produced and saved in the form of money. It's really simple. We just want an honest ledger. And I saw a lot of stuff on Wall Street that was not necessarily nefarious, but was not entirely honest either. And that's the issue.
I had Dennis Porter, who you may recognize on one of these Twitter spaces, and he was talking about some of the things that he did on trying to push for certain regulatory clarifications on digital assets. Outline for the audience that term digital assets, because I do think that there's legitimate digital assets. There's also legitimate digital fraud, for lack of a way of saying it.
Yeah. There's been a lot of fraud. Holy cow, there's been a lot of fraud, right? There's been a lot of fraud in the internet, but that didn't stop us from using the internet. And if you step back and think about what's the right approach from a regulatory perspective, what you want to do is have people do most of their internet browsing in a browser with an ISP, as opposed to using Tor, right? Because Tor is not as easy to ensure that unlawful activity like human trafficking is going on, right? So So conceptually, the right way to think about the lawless part of the digital space is you want people to be in the lawful or lit part, not in the lawless or the dark markets, right? And in the dark markets where you don't have you really have to have a lot of skills. If you're surfing the internet using Tor, if you're making your, telephone calls from the command line interface as opposed to using Verizon or AT&T or T-Mobile or similar provider, right? So, the providers are in the position. This is where we get into the whole fight over, content moderation on bulletin boards like Twitter and, Reddit, right? What is the obligation of the provider of those services to monitor to ensure that they're not being used for illicit purposes? And, there's a debate over what illicit purposes is. I'll set that aside. But I think all of us would agree we don't want those systems to be used for terrible things like trafficking children. Okay. So, what's the best way to get people to use those services where somebody is watching to ensure that children are not being trafficked? And the answer is you create incentives for them to do so by making it easy and making it more secure. And I think if the regulators really understood how digital assets were not going away, it seems clear to me that they don't understand that. Long story short, they're learning a hard lesson. They don't have control over these assets, and they're pushing more and more of the activity into the dark market where it's even harder for them to surveil and ensure that the unlawful things that are taking place are controlled, are prosecuted, are cracked down upon. So it's the opposite. They're getting, there's an old saying, organizations that make decisions out of fear tend to get exactly what they feared. Well, their fear is that somebody's going to be transacting in a market that they don't control. Well, okay, so how about recognizing that the technology isn't going away and creating regulated paths for people to use it? Many people will choose the regulated paths. Many will not. But the most important thing is that they have the ability not to if they don't want to. That's what keeps the freedom of the internet itself, is that, anyone who has the skills can use Tor. Just like anyone who has the skills can self-custody Bitcoin and transact on base layer Bitcoin. They don't have to go through a trusted third party if they don't want to. And it's that ability that is what makes it freedom technology.
So on the regulated path front, outline sort of the history of what exactly you did with Wyoming and the laws that you helped to enable.
Well, Wyoming did some very basic things that seem pretty boring, right? One of the first things Wyoming did was define digital assets as property so that if someone steals them, then that's theft and the theft laws apply. And it also defined the rights and obligations of parties to commercial transactions. So that if there's a dispute over a digital asset, that a judge in a Wyoming court has a roadmap for adjudicating that dispute. We are seeing right now, a whole bunch of courts are just throwing up their hands saying, I don't know what law I'm supposed to follow because it hasn't been defined. It hasn't even been defined what a digital asset is in some of the most important states that have the most financial transactions. Like Delaware, for example. Delaware's done virtually nothing in this area.
Right. So it's basically, there's no precedent, effectively.
Correct.
In all these cases.
Yeah. You either need a statute or you need a court case precedent. That's the way the sort of, the Western legal systems work. It's not just in the United States. It's sort of the English common law systems. There are different legal systems around the world, but in those countries that follow those legal systems, that's the idea. You either need to have it in statute or you need to have a case law precedent that says this is how the judge is supposed to rule. But what happens with the internet? And, it took a while for the statutes to be enacted. And we're still fighting about them, 25 years later, right? The whole question over censorship on, platforms like Twitter is that, that's one of the things that is very topical. And yet it still hasn't been resolved in the court system. There's still litigation over whether anyone can be censored, right? And you start to see how, all right, the concept of us wanting to block child pornography from these platforms starts to turn into, well, if I can block child pornography, then I'm going to block, somebody whose politics I don't like. And that's what happened, right? So one of the things that I think is so important is that those fights need to be fought out in Congress, in the, in the by the elected officials of the countries, rather than to have unelected regulators like bank regulators being the ones who are adjudicating those questions. And, at least with a private company, there's liability. But in the case of the financial services industry, it's actually behind the scenes, the bank regulators, right? This is what I'm talking about is something called Operation Choke Point, which started about 10 years ago under the Obama administration. And it started with the payday lenders. And eventually it covered 30 different industries where the unelected bank regulators were behind the scenes putting pressure on the banks not to service politically incorrect industries. Well, an industry that's politically incorrect to one person might actually not be politically incorrect to another. So you start to see how it's a slippery slope, for sure.
How did you even go about doing this in Wyoming? I mean, did you have connections with lawmakers? How did you even get in front of the right people to try to push, these definitions?
No, if you go back to it, I mean, I grew up in Wyoming, and I had been a Wyoming legislative intern. But I've always kept, during college, but that was, 1989, I think, a long time ago. And, I had a lot of connections in Wyoming since my family was here. I always kept one foot here, served on boards at my undergraduate alma mater, the University of Wyoming, for more than 20 years. So yeah, even while I was in New York, I always kept the connection. So it wasn't difficult to network to folks. And it was a college friend who introduced me to a local accountant in Cheyenne. And the three of us kind of locked arms this is fall of 2017. It was a long time ago now, and just networked to our connections into Wyoming. And everyone looked at this and said that, it started small. It started with, okay, we just wanted to fix the bad money transmitter statute that Wyoming had that was it was one of 3 states that were keeping the Coinbases and Circles of the world out. Coinbase departed Wyoming in 2015. Okay. And some people in Wyoming had gotten their coins caught when Coinbase departed, and they legally couldn't transfer those coins anymore for those customers. Right. So, there was a desire to fix that. But what happened is the Wyoming legislature, there was a legislator named Tyler Lindholm and a very talented legislative drafter, Chris Land, who ultimately rolled up sleeves and said, all right, if we can do this, we're early to something that I spot as a big trend. Tyler Lindholm, somebody donated Bitcoin to a campaign he had, I think in 2015, right? So at early days. And he said, listen, what else can we do? What else can we do? What else can we do? And so I just became the conduit for ideas that were coming from the industry, and the social media following built. And long story short, it all turned into something much more meaningful. But it wasn't intended. I just went with it. Yes, you're absolutely right. And, El Salvador is different than the United States, right? Countries that have experienced hyperinflation like Argentina and Zimbabwe, very different perspective than an American or a Brit or someone in Singapore, right? Because the concept to them, Bitcoin is different. Bitcoin is a more reliable store of value. Or, for example, like Venezuela, one of the most interesting things a couple of years ago was that people were mining Bitcoin so they could get stable coins, US dollar stable coins. They didn't want the Bitcoin. They wanted the US dollar. And mining Bitcoin was their way to be able to transact in crypto markets to get the US dollar. So the different users, you're raising a very good point. The different users are very different. And I think, it's so interesting for the arrogance of the Westerners who have not had to deal with volatile currencies and living through hyperinflation to thumb their nose, particularly the regulators, and say, well, there's no use case for this technology. We don't need it. Well, that is the classic Western arrogance of, well, you might not need it, but somebody else might, and might really appreciate it because they might appreciate a more stable place to store their funds, or someone who's a dissident and in a dictatorship might appreciate the ability to store their savings in a currency that the dictator can't take away. for example. Those kinds of things, Westerners just really have trouble getting their arms around it. But if you've been around the Bitcoin space for a long enough time, you start to interact with people who have the different perspective, because this is truly global money. Well, it's definitely a store of value. It's a system. To me, it's an insurance policy against an unwieldy collapse of all this crazy leverage that exists in the US and Western financial systems. And it's also freedom money for the reasons we just talked about. Right. Again, right now, most Americans don't put any stock in that. But I also think, it's the insurance policy, right? But others wouldn't think of it that way. Others would think of it as a store of value. Now, the way I look at the volatility, of course, the first question that comes up when you look at it as a store of value is, well, wait a minute, it hasn't been a good store of value because the price has been so volatile. That's true. But the question is relative to what? Relative to, someone in Venezuela who lived through the hyperinflation? Bitcoin was more stable. And here's the other piece that I always share with Westerners, particularly Americans. When they talk about the price volatility of Bitcoin, the system is far more stable. The price of the unit itself, Bitcoin, small b Bitcoin, is not stable, but as a system, Bitcoin is far more stable. The banking system in the US goes through these periodic upheavals where the system is on the verge of unwieldy unwind. And yet the US dollar itself doesn't have that instability. The skeptics would say not yet. And I think that's right. Eventually, the US dollar won't be the world's reserve currency. That's not a radical statement. Heck, Treasury Secretary Yellen even made reference to that this week. Eventually, the US dollar won't be the world's reserve currency. Really, the fight is between those who want to keep this good thing going for a while and those who don't. And again, that's a value judgment. But yeah, long story short, your question is spot on. It's all the perspective that you have and the experience that you have that gives you the different reasons why you like Bitcoin. Well, so I should go up and dig up. I haven't had time to go and dig up my old tweets about ETFs. I started writing back in 2018, so 5 years ago, that Wall Street coming into Bitcoin was a double-edged sword. It's not black and white. It's not all bad. It's not all good. And, the tribalism in this industry, folks tend to think it's all bad or all good. It's not. It's a double-edged sword. It's going to bring more liquidity. It's going to bring the means by which a lot of folks who are not comfortable with self-custody are going to be able to buy it. It's, filling essentially the same need that GBTC was, but there's going to be paper Bitcoin that comes out of that. Why? Because of the way the ETF market maker structure works. And I literally have it open on my screen. I just haven't had time to read it yet, to go through and look at how they're planning, what was a plan of distribution for these. And typically ETF market makers, in every ETF prospectus, you're going to see that ETF market makers have the ability to create fund units even if they don't own the underlying asset. Okay, that is another word for naked short selling. That is another word for fractional reserve banking. That is another word for going leveraged. Okay, again, they can create more fund units than they have real assets in the fund. So they're going leveraged. Now, the design is to allow that basically to keep liquidity flowing in the ETFs and market makers, just like, the old New York Stock Exchange floor brokers. They had the ability to go short, basically to borrow more shares than they owned when they were making markets so that there was liquidity. Now, that is the SEC historically by allowing that with ETFs. And by the way, this isn't specific to Bitcoin ETFs. Every ETF works this way. Every ETF essentially has some leverage in it because the market makers are allowed to go naked short. They're allowed to sell more fund units than there are real assets in the fund. And that's the thing I worry about. And I've been warning about that for a while. And you saw some folks when the announcement came out saying, all right, here's, this paper Bitcoin problem was caused by Bitcoiners themselves or crypto people themselves, really more crypto people in the last 5 years. Now here comes the big Wall Street money and the paper Bitcoin problem, which is what I'm just talking about here, starts to get a lot bigger. What's the problem with the paper Bitcoin? It completely changes the market price to manipulate the market price. What is it? What do I mean by that? Anytime you're selling more of something than the thing that exists, you're increasing the supply. And if you think back to your supply demand curves that you learned in economics class, you push the supply curve out to the right. What happens to the price? It drops. Okay. So all of these things ultimately suppress the price of the asset, the underlying asset, relative to what the real market price would be. And some people call them price suppression schemes. And again, they're not wrong. There's no question that anytime you create more supply of something than the real underlying supply, you're dropping the price because some of the demand for the real thing is being satisfied by the supply that's fake. And that's causing the price to drop. Now, granted, you typically are not going to see it be more than a few percentage points, but there's a famous case called Dole Food in 2017, a Delaware Chancery Court case that had this exact situation. It's not an ETF, but this exact fact pattern occurred where the Wall Street ledger systems created 1/3 more paper Dole Food shares than there were real Dole Food shares. Okay, what did that do to mom and pop? Mom and pop had their pockets picked because a lot of people were buying the fake Dole Food shares when what they should have been buying was the real thing, and there was a much lower supply of the real thing. And it suppressed the price. And it's one of these subtle skimming mechanisms that I looked at this technology, back to your earlier question, and said, I think this technology is going to help us get to an honest ledger system. And that's going to be fair for everyone. No one should be arguing that the ledgers on which we store the fruits of our labor should be honest. No one should disagree with that. Yeah. Yes, it is going to have an effect, right? And so again, like I said, it's a double-edged sword. Do I welcome the new pathway for people to access Bitcoin? You bet. But I recognize that it's going to create more paper Bitcoin and a new attack vector on Bitcoin's price that way. And so, yeah, it's a double-edged sword. It just is. Not surprised that it's happening. I am very concerned that there does seem to be something going on in Washington, D.C. right now, which is favoring the large incumbent. Okay. And so there were a lot of people who were saying, if this is BlackRock, if BlackRock gets approved, when all the different attempts to get a Bitcoin ETF approved by the non-large, very powerful incumbents were not approved, boy, is that going to cause an uproar in this space. And I think that's right. And I think it's right for a lot of people to be calling out the SEC. But if BlackRock is going to jump the line, then something's very wrong. And there are a lot of regulators in control of the Washington, D.C. federal financial regulators who profess not to want to make the big financial institutions bigger. Watch what they do, not what they say.
So, Kayla, at the start of the conversation, I was joking about, you're one of the few people I see left on at least FinTwit that still has the laser eyes, and I actually commend you for that. You'll notice I have lumber and gold eyes, and I put that on largely around the top when I think there was a lot of overconfidence and what I would argue was uneducated speculation. It's like when everybody had laser eyes, to me, that was kind of a contrarian sign on the price action. Some people will say we're in a new bull market. Some people will say we're in a new bear market for Bitcoin. I'm curious to hear your thoughts if you think if the bear market in Bitcoin is still there, if that's actually a really good thing because it allows time for the regulators to play catch up. Like I would think that you'd want to have the laws and regulatory framework really defined for any kind of real next bull move, because it probably removes a lot of the leverage and speculative fever that causes the insane volatility that prevents other institutional players from really getting involved. Am I off on that idea?
Well, I don't know. I don't think that the really attractive aspect of Bitcoin is an investment. I understand why there needs to be a token, and the token is the money. And of course, the whole number go up meme is a part of it. Okay. And historically, the price of Bitcoin did track the hash rate. So there used to be high correlation between the two. That has broken recently for fundamental reasons that don't have anything to do with Bitcoin itself as a token. It's more to do with, the mining dynamics and the like. Okay. But here's the point. I've said this many times before. I think the price of Bitcoin is the least interesting aspect of it. This is incredibly powerful technology. So I don't look at it as an investment. I look at it as a way to move value around the world. Arguably, it's already a top 15 global reserve currency because people are using it to move value around the world outside of the traditional fiat currencies and, very importantly, outside of traditional payment rails. Okay, so they're not using FedWire and ACH in the US or SWIFT for international movements. This is a payment rail, and it's a token, and it's a technology, and it's a freedom technology, and it's a store of value. It's all of those different things, and different people put different emphasis on what those different things are for the reasons that are unique to their own situation.
Just to reset the room for the remaining minutes, everybody, please make sure you follow Caitlin Long. I know we started a little bit late here, but as you can tell, very knowledgeable, speaks extremely well, and I think he's doing a lot of great things in the space. Again, this will be a podcast under Lead Lag Live, and we will now go to...
Great question. Great observation. So there was I'm sure you're familiar with the block size war that was fought in 2017 over this very question. Was it more important to keep the fees for transactions low enough to keep transaction size small, which would have required increasing the block size? And that's what Bitcoin Cash did. And arguably, that's what Ethereum did. The great book, The Block Size War, is really great on this front. And they argued that Ethereum essentially took a lot of the big blockers who were interested in using Bitcoin for non-financial use cases, because it's certainly much more extensible, right? That, it's smart contracts and the like. And it does have a lot of non-financial use cases, which I've supported. But those those non-financial use cases don't need the security of Bitcoin. So you don't need to pay for the security of Bitcoin. You don't need to pay the transaction fees for that security. So the two questions you asked are actually very much related. And I assume that's why you asked them related, because the block size war was fought in order to keep the users of Bitcoin, the node operators, in control. It's not the miners that are in control. It's not the large companies that were service providers that were in control. It's the node operators that control Bitcoin. And that's where the user activated soft fork was so important, that we proved who really controls Bitcoin. And it's the users, regular mom and pop users. It's the node operators. Now, had Bitcoin chosen to keep the, individual miners able to continue to mine, as opposed to favoring the node operators, then we would have had a different economic balance. And I think the economic balance was correct. But then let's go to the next question about the BRC20 tokens, ordinals, et cetera. My thought on that is it's a free market. Block space is something that the market should have the ability to sort out. And over time, I don't think that the non-monetary uses will be justified in paying for the high security of Bitcoin. There have been some academic studies that look at whether Bitcoin is too secure. In other words, there's too big of a hash rate relative to the security. I mean, this is by far the most secure computer system ever built by orders of magnitude, and more powerful than the most powerful supercomputers that exist by orders of magnitude. I mean, the Bitcoin network surpassed the most powerful computers, like 8 to 10 years ago, right? And so the point is that you really don't need to pay up for that security for non-monetary uses. And I think the market's going to sort it out. I would be shocked if there are non-monetary uses that survive long-term because the cost of security is too high. And ultimately on Bitcoin is too high. The only thing that justifies that cost of security is the monetary uses. So now it gets back to the whole question of the block size. And I actually think that just like in that book, The Block Size War, the Ethereum community, the fact that Ethereum was around at the time that Bitcoin had this internecine war over the block size, I think that was good for Bitcoin, because those who wanted to have something more extensible and useful in smart contracts and non-monetary use cases didn't need to pay up for Bitcoin security and went to Ethereum. And, they're two very different ecosystems, as we all know. And the market worked itself out. So I love the fact that it's very difficult. There's a big debate going on right now among the Bitcoin developers, whether the code should be permanently frozen. And these are exactly the kind of debates that should take place with Bitcoin not moving fast and breaking things, Bitcoin moving very slowly and deliberately, watching all of the other blockchains like Litecoin, which adopted some of the technology upgrades in Bitcoin a year before Bitcoin did, more than a year in one case, right? So that those become the testing grounds where the Bitcoin developers can look at the outcome and say, all right, that is going to be worth updating in Bitcoin. And they put it to vote through the normal BIP process. And, those of us who have a lot invested, small I invested, I'm not talking about financial investment. I'm talking about time and energy and effort invested. It's going to be very slow. Bitcoin is not the place where developers are moving fast and breaking things. And I consider that a feature, not a bug. And yet there are other blockchains where the developers can and are and will move fast and break things. And that's fine too, just not Bitcoin. Lightning Network. I'm so glad you asked that. Great questions, everyone. Lightning Network, I'm a huge fan of. We haven't talked about that yet. So because of the way the block size war transpired in Bitcoin, and it ended up in the right place, in my opinion, that we didn't want big block sizes. What was that ultimately going to mean? That Bitcoin, base layer Bitcoin, is going to be reserved for high value transactions. You really can't buy a cup of coffee with it. And I think that's a feature, not a bug. Now, it therefore needs some scaling technologies. And the awesome thing about the Lightning Network is that it's anchored to base layer Bitcoin. So you still have the honesty of the honest ledger, the most secure and most honest ledger, I think, in human history. But you can use something that is secured to that ledger to buy your cup of coffee. And that is Lightning. And basically all that Lightning is just a netting mechanism. It's layer 2. It enables folks to not have to pay base layer security cost. Is it as secure as the base layer? No, of course not. If you need something that absolutely has to be secure, of course you want base layer Bitcoin. But of course, the security budget for something like that should go up when the value at risk is higher. So if you have a lot of value at risk, then you want base layer Bitcoin. If you don't have a lot of value at risk, if you just want to have $5 in a hot wallet so you can buy a cup of coffee, $5 worth of sats, Satoshis, which is how the Lightning Network is measured, then great. You put $5 worth of Satoshis. I don't think people realize this, but it's quite a profound statement. Right now, the 8 billion people on planet Earth, if you want to, can transact and create US dollars on your phone if you know how to do it using the Lightning Network. And I think that's, again, incredibly empowering to individuals. It's freedom technology. It's decentralizing power back to individuals around the world. This is one of the warnings that I've given the US bank regulators that are trying to keep all this out of traditional finance. There's no way they're going to be able to. I mean, look at the disclosures that came out today with Tether. Tether was getting US dollars, but not through US banks. They were getting US dollars through non-US banks. A lot of Chinese banks, as from what I saw, I haven't had a chance to go through the Tether disclosures, but it sure looked like a lot of Asian banks, particularly in China, were providing US dollars to Tether. So, but that's the point, right? That's outside of the US regulators' control. There is this market that a lot of people study called the Eurodollar market. It's a misnomer. Euro dollars are just offshore US dollars that in most cases never come back on shore. So here's the point. Most people using Lightning Network won't transact in Satoshis. They'll transact in their fiat currency. But what they won't realize is that the intermediary payment rail over which they're transacting happens to be Bitcoin based. And so I'm very excited. You look at some of the VC investment in Lightning, look at some of the people who are working on Lightning, look at some of the companies that are developing Lightning. It's on a very different trajectory than the rest of the crypto ecosystem. And frankly, that's because, in my opinion, it's not a speculative thing. It's real technology for real payment. And companies are able to raise capital. It's so interesting how the capital raises in the last, 6 to 9 months, ever since the FTX collapse, have most of the capital raised in the Bitcoin industry has been in the Bitcoin ecosystem itself. It hasn't been in Ethereum and other blockchains where there was a lot more price speculation rather than real building taking place. There was a lot of that too, but you see where I'm going. I am so excited about the real building that's taking place in Bitcoin and in the Lightning Network. That was a very long-winded answer to your question, but I'm glad you asked it because most people in the world will not end up transacting on base layer Bitcoin. They will, however, end up transacting on the Lightning Network, and it will look to them like they're transacting in their local currency, but what they're really doing behind the scenes is helping to build the Bitcoin network.
I think that's a good place to wrap this Twitter space up. Caitlin, for those that want to track more of your thoughts outside of Twitter, are there other places you can point them to?
Gosh, well, watch Custodia Bank. We don't have anything to announce and won't for a little bit yet, but stay tuned. And I did say that, I have said publicly that Custodia did file in April our 60-day notice with the Wyoming Division of Banking ahead of offering Bitcoin custody. We're going to be offering Bitcoin custody in a very different way than what's available to the market today. Custodia serves businesses only. So stay tuned. We will have more announcements about that. And at the moment, we're not taking third-party customer funds, but stay tuned because we've been beavering away the tortoise, not the hare. But, a lot of the service providers, especially in the US around this industry, have unfortunately not survived the recent crash. In a lot of cases, especially the criminal cases, I say good riddance to them. The rest of us who are really trying to build something durable and lawful, trying to comply with all the laws and in good faith, trying to work with all the regulators here, I think we're going to be the winners in the end. And it remains to be seen, but this is going to take years to play out.
Thank you, Brad, for joining. And this will be a podcast on Delete Lag Live. And thank you, Caitlin, for making it work despite the initial issues.
Yeah, I appreciate it. Thanks, everybody.